Let's be very clear. You mentioned that he started by saying that the banking system is sound and resilient. I'm not sure if you've seen this after hours, Michelle, and this could be breaking news, but PacWest Bank is failing after hours. Okay, the bank stock is down 50% after hours. It's a very small bank, only 40 billion in assets, about 1/5 the size of First Republic, but nonetheless, it's on its way to the glue factory. Okay, so PacWest is done. It's over for them. There's probably another 20 banks that are in that position. So the banking system is not sound and resilient, Mr. Powell. You are not a good poker player. And the bigger news is not the Fed raising rates again to a range of 5 to 5.25%. It's the speed at which they raise the rates and the speed at which things are now breaking.
I'm pleased to say that the regulators have taken action to facilitate the sale of First Republic Bank.
As an investor, it's crucial to find the right opportunities to protect against financial risks. In this conversation, renowned investor Greg Foss sheds light on the risks associated with sovereign debt and how Bitcoin can serve as a potential hedge against it. Foss, who has spent most of his career trading credit default swaps, breaks down the concept of a credit default swap as a form of insurance on the default of any counterparty. He emphasizes that sovereign debt, despite being typically considered the highest rated credit within a country, still has a probability of default. Foss then goes on to explain how Bitcoin can be seen as a credit default swap or insurance against a basket of fiat currencies and sovereign debt. He breaks down the calculation by taking the open market credit default swap rates on the US and multiplying it by the outstanding debt of the nation. Before we get into the video, please like, subscribe, and click the notification button as this helps our small channel grow. Now, let's hear what Greg has to say.
I think Jerome Powell is a horrible poker player. I think his body language reeks of desperation. He does say that the danger is that the Fed waits too long or in both directions. And in fact, that is always the danger, and the Fed always does. They tighten too much, but they waited too long to tighten at the outset as well. So this is a bit of a ping pong match that I've seen over my 30 years. Let's be very clear. You mentioned that he started by saying that the banking system is sound and resilient. I'm not sure if you've seen this after hours, Michelle, and this could be breaking news, but PacWest Bank is failing after hours. Okay, the bank stock is down 50% after hours. It's a very small bank, only 40 billion in assets, about 1/5 the size of First Republic, but nonetheless, it's on its way to the glue factory. Okay, so PacWest is done. It's over for them. There's probably another 20 banks that are in that position. So the banking system is not sound and resilient, Mr. Powell. You are not a good poker player. And the bigger news is not the Fed raising rates again to a range of 5 to 5.25%. It's the speed at which they raise the rates and the speed at which things are now breaking. So after hours, PacWest Bank stock, which was worth about $1 billion, which is still minuscule compared to its asset base, is now been carved in half as they announced that they are looking at strategic options. I'm not sure if you saw this, but this today on Fed Day, the same day that Jerome Powell makes that statement, PacWest Bank is on its way to fail over the weekend, like all other banks do on a weekend, and it will be looking for buyers. My opinion only, but certainly that's the way the stock is trading after hours.
Right. And, we are then looking at the other regional banks, because when you hear something like this, all it does is create more fear, uncertainty, and doubt. And if you're a depositor in that bank, you're like, I don't want to stay in a regional bank. I'm going to pull my money out. So is there really any hope for these regional banks? I know that last time I checked, like the iShares ETF of regional banks was down about 35% year to date, probably worse now with this PacWest development. But can we see a banking sector with regional banks if this continues to spread, if we have this uncertainty having a contagion effect?
Well, so I mentioned to you, I went to school in the USA. This was back in 1986. And when I started school in the US, there were 15,000 banks in the US, 15,000. And today there's less than 5,000. So in my 30-year career, over 10,000 US banks have been closed or merged. And that trend will continue, but there's still 5,000 of them. There's probably 25 meaningful regional banks that are going to fail, including the ones that have already happened, because First Republic Bank was a top 20 bank in the United States. When I say top 20, that's measured by the size of their balance sheet or the amount of loans they had outstanding. So PacWest is about 1/5 the size of First Republic. As I mentioned, it's $40 billion worth of loans. But, this is a domino effect. There is contagion risks. This is like the S&L crisis back in the 90s, okay? Savings and loan crisis back in the 90s. One leads to another, leads to another, leads to a lack of confidence. There's two things that concern people, right? The first is that the banks are at risk of mismarking or not mismarking. The valuation of their treasury portfolio has been carved, and therefore the equity valuation of the bank has been vaporized. The other side is the deposit side. Yeah. How much is insured? But what can you do with those deposits? You can now take those deposits out of the bank and put them in treasury bills and earn 5% versus bank deposits that get paid less than that. So this is all part of this is a result of the Fed increasing rates to make alternative to deposits, so alternative investments to cash deposits like treasury bills, that much more attractive. Not only to mention, oh my goodness, if I'm worried about the bank failing, I'd rather have my deposits in treasury bills than I would in the deposits of a bank, right? So you can see how this is all circular. I'm going to quote former Dallas Fed Chairman Robert Kaplan, when he said we're only in the first innings of this banking crisis, regional banking crisis. And I'm also going to quote Charlie Munger, who I don't always see eye to eye on, but he said he believes there are another shoe to drop in the regional banking crisis as well. So just this afternoon is another example, and this isn't going to end. Despite what Jim Cramer says on TV, this is not going to end with First Republic, okay? That's not how banking works.
The total funded and unfunded liabilities of the United States approach $200 trillion US, and Foss estimates that the implied insurance value on the US alone is around $3.2 trillion. In contrast, Bitcoin's market cap is around $500 billion, making it a potential hedge against sovereign debt at a significantly lower cost than traditional insurance. One of the most significant advantages of Bitcoin, according to Foss, is that there is no counterparty risk, which is a common issue with traditional insurance. When you hold Bitcoin in self-custody, you don't have to worry about buying insurance from an insurance company, and there's no risk of the insurer failing. Foss also highlights that Bitcoin's technology and auditability make it superior to gold as an investment asset. While gold has been used as a hedge against inflation and financial risks for centuries, Bitcoin's technology allows for easy transferability, portability, and auditability, making it a more attractive investment option for investors. In conclusion, Foss's insights into the potential benefits of Bitcoin as a hedge against sovereign debt and financial risks provide valuable knowledge for investors looking to diversify their portfolio. While there are risks associated with all investments, Foss's analysis shows that Bitcoin has the potential to offer a unique form of insurance, with significant advantages over traditional insurance options.